Hey, what's up everybody? Welcome back to Royal Blu FX. In today's video, we're going to quickly go over some of the trades that we've taken as of yesterday, which is October the 19th on a Wednesday. We always trade the US30 Index, so if you guys want to go ahead and follow us on that, you may do so. Also, if you're interested and curious on how we trade and how we trade so effectively in the market, go ahead and visit our website at RoyalBluFX.com to become a member and to start trading like us. And if you haven't already, go ahead and please subscribe to this channel because we always give out free content. So let's begin.
Will it spin right? Will it not so? Let me get high. It's a new feel, but it's all good. Are you looking at me?
Alright, so first things first, we always start on the 15-minute time frame. The only reason why is because we treat it as our higher time frame, and then we look to scalp on the 5-second time frame. Okay, so I know a lot of you guys don't have 5 seconds or don't have the seconds time frame, which is definitely okay. It's totally fine as long as you understand that structure is fractal and you can trade the markets on any time frame, just the way we do. Okay, a lot of people do say, oh, the 1 minute's so busy, or the seconds time frame is so busy, but it's actually not the case unless or until you know how to trade structure and liquidity and everything, or until you know how we trade, right? So I always start on the 15-minute time frame, right? And what I do is I zoom out and start looking to see where structure is and where the direction is. And you can easily tell here. Let me just actually even show you guys. Right here is where we focused on yesterday. This was yesterday, on Wednesday. Okay, before that, this was the Tuesday over here, which we already did the video on that. You can go ahead and check it over here on the link. And right here is where we were trading yesterday. So what I had to do was, whenever I start looking on the higher time frame, I need to be seeing where's structure, where's liquidity, and where's the direction. Okay, and so what I predominantly do is just look at liquidity, where the main liquidity is on the main time frame. And you can see here I marked it out over here, right? There was the high, there was another high here. There's also some liquidity in here that I saw because we were trading this the 430 Open, the US Open, or the New York Open, and you can see it says 5:30 here because this is Los Angeles time, obviously, and Los Angeles 6:30 Open. The New York Open's at 6:30, so it's 4:30 here. Anyway, so I was looking at all this right here. I was mapping out this liquidity here because there was a push over here where buyers bought there, more buyers bought here, right? And then below it was our order block right over here. Okay, so I didn't really pay attention to any of this information here, obviously, because it's irrelevant. What we need to be doing is paying attention to the more relevant information of the data that is given to us right now. And so what I can see that's the most relevant is this current high and this current low, and everything that's inside of this current high and current low, okay, on the higher time frame. And so then I'm like, all right, great. Price came and mitigated here at 5:30, as you see, so 6:30 Los Angeles time, which is 4:30 here, is when I start trading the open. So let's go scale down to the lower time frame right now so I can show you what I was doing and what my sort of thought process is on the markets here. Okay, so if I zoom in right over here, I'm going to scale even further to the 1 minute. So now when we scale on the 1 minute, after I did my due diligence on the higher time frame, like marking out the liquidity, the structure, the demand zones, the supply zones, or what have you, I start to go down on the 1 minute time frame because the 1 minute's where I will most likely see structure or order flow and direction. So I clearly want to see. I'm clearly waiting for the open right here. Well, as you can see here, it's 6 o'clock, right? 6:15, 6:16. I usually start about 15 minutes before the open, so just so I can start mapping everything out on the charts, right? If you zoom out right here, you can see what I just did over here. You can see that I had more liquidity over here, right? Then I mapped out my supply zone, and then I marked out more liquidity, right? So what's interesting is the market. I was here, right? So at 6:25 here. And I start at was at 6:15, so it'd be 6:15 here. So I was at 6:15 here, just kind of watching what the market is doing, right? Because I want to take advantage of that open, of that New York Open. And so once I marked everything out like this, right? This liquidity area wasn't here at the time, but let's just go further here to talk about this trade right now. Okay, so let's scale even further now to the 5 seconds. So now I know what I'm looking for. I marked out more liquidity right there, as you see, right? That was our current high, the supply zone. So I was hoping, or hoping for price to respect the supply zone and then push bearish here. Now I'm going to wait for this to, it's a little frozen right now. All right, so we're back. The charts are working finally. Let's go right down here. So as I mentioned to you guys, I'm about 15 minutes before the US Opens, and right over here, if I zoom in, it was 621 right here, just right around here. Okay, so sometimes if I see a good setup, I'll take advantage of it. But the reason why sometimes I trade before the US Open is because if I see a good setup, I'll take the trade, no matter what. Here I saw a great setup. Only reason why is because we saw a bunch of liquidity here. Price came in, respected this low, mitigated this low here, right? And so what I was looking for here was for prices to show me an aggressive move, an aggression, okay? And then the aggression happened here. You can see there's a break of structure, right? So what my intention again here was to look for liquidity where I saw there, and then for prices to come and respect this low. Once they show that low, I'm looking for another aggression for the entry. Now, I didn't take this on the 5 seconds. I took it on the 1 second time frame. If I scale down to the lower time frame, I'm afraid the market might pause or whatever, do something like this, freeze. All right, so here we are on the 1 second time frame. Okay, now I know this is really crazy because trading the 1 seconds is really fast, but bear here with me. All right, so everything, as I mentioned to you, is fractal. All the structure is fractal, right? You can see what I was telling you about here, where price went below here, took out all this liquidity, which is important to us, right? It respected this low, which is even more amazing. Then you saw the aggression. The aggression happens to be a chalk, okay, a change of character. You can see that we had a break right here and a break below and a break above. Now, you guys might be wondering, well, why didn't you take a buy here, right? If it's a chalk. Well, good question. The only reason why is because I always want more confirmation, right? Confirmation is key to trading. I mentioned to you guys as well, when prices retraced, I'm looking for that liquidity to be taken. And also to be visible to me too. If there's no liquidity, prices can still go bearish like this and just go past me. So this is as to why I didn't take a buy right here. I waited for prices to respect this low like this, again, to show me more aggression. Once I saw more confirmation here, you can see that we do have a complete chalk right there, right here and right here. Now I know it's a little hard to see on the 1 second, but bear here with me. Maybe if I toggle this on here, you might be able to see it better. There you go. You can see there's a high there and there's a low here. So we had that low and this high broken. And this is where I was able to position myself really well and nicely, and then look to target this supply zone because we were still relatively on a downtrend. And so this was the supply zone I was targeting. Now, I had 1% risk here, right? Targeting this high over here at 15.5%. And this was a really good trade. Okay, so the reason why I was targeting the supply zone is because prices could have gone bearish here. There was no intention of knowing if prices are going to respect this supply zone and continue bearish, or prices may also break to the upside, right? So this is why I was able to do that. And that's pretty much essentially as to why I took this trade. You don't have to take trades before the US Open, obviously, but I do sometimes if there's a good opportunity. Now I'm going to fast forward here and get to the next trade over here so you guys can see what I did. All right, so here we are on this area here. After we took this trade, right? Remember, I'm looking for the 630 Open, the US Open. All right. So we had the supply zone marked out right here. If you can look at my crosshairs, it says 629 right here. So I'm actually looking for a buy here because I know that prices are pushing bullish here. They've taken out this liquidity. Prices from this high have pushed bearish, right? But then I'm following the order flow. There's a low, there's a high, there's a low, there's a high, there's another low, there's another high. Therefore, now I'm looking for the buy. Okay, I know that's funny. That actually rhymed. So it's also important to follow your order flow, right? So here, after supply wasn't respected, what I was typically waiting for after this break of structure right here is for prices to come back here to this demand zone. But what happened? Prices left inducement and more liquidity, and then as soon as 630 opened, right, I think it was right around there, Notice this wick, it came down fast. I was hoping it would come here and tag me on the demand zone and then push bullish, but instead it just pushed bullish here, and I couldn't have anywhere to enter. So again, sometimes I'm fortunate to catch the open, sometimes I'm not, but if I did, that would have been some serious R&R right over here. Now let me just play this a little bit quicker so you guys can see what I'm doing here. So I had my supply zone, my major supply zone on this high over here, and this is the major supply zone, okay? And so after price over expands, right, typically prices should come in retrace, right? So what I'm doing here is I'm actually trading a retracement, not an actual trend, because the trend is actually pushing bullish, okay? And so I'll explain here on the entry why. Oh my goodness, excuse me, it's going too fast here. Okay, there we go. All right, so I had a bunch of liquidity sitting all the way to the left side over here. If I zoom out, I'm going to show you guys. Okay, if all this can populate out quickly. Actually, you can even see it here. There's liquidity here, right? There's liquidity over here. If this populates, I'll be able to gladly be able to show you guys. Okay, right here we saw more liquidity here, right? More liquidity here. Of course, this is our supply zone. So this gave me enough confidence that prices should go bearish here. Okay, once liquidation happens, we need to be able to think that there's the idea of mitigating. Okay, so when prices mitigate, we are able to look for the position to sell, right? For the entry. Let's go zoom in here. I'm going to show you guys a bit more. All right, so what does the aggression look like? Well, the aggression is supposed to be where prices or the banks are pushing excessively down fast to the downside. Okay, you can call it a break of structure, a chalk, whatever, but it's really a chalk. Let me just show you over here. If you can see over here, there is a chalk that I put. There was that low, there was that high. Okay, over here to this top side over here, that was where the high broke and the low broke here. So I was really watching what was happening here, because when the aggression happens, okay, primarily what I'm expecting here is for liquidity to show again, because we know that liquidity is what drives the markets, right? What pushes the market. So sometimes it'll come and take liquidity, sometimes it won't. The banks do whatever they want, right? Prices may also go to a liquidity sweep, okay? A sweep where prices show like something like this right here. This high swept this high, okay? So this is considered to be a liquidity sweep. And once a liquidity sweep happens, prices tend to go bearish. You can see over here, if I mark this out here, you can see prices are actually went bearish, right? But they didn't just mitigate this high. What they also did was they took this liquidity from this high as well, which means they were actually mitigating this supply zone right here where I had it marked originally. So what I saw here was inducement. I marked this inducement because prices didn't break and mitigate. They just broke and then just sold off. So you had a lot of sellers who were trying to sell here, right? And what your intention here is, what your intention is here is to not sell off as soon as prices are selling off, because they haven't mitigated anything. They haven't touched your order block, right? So I thought, okay, well, that's my inducement. I need to wait for price to retrace. Prices retrace, tap my supply zone here, and inducement is liquidity, right? It's another type of liquidity. Once prices took that liquidity and mitigated, I pretty much sold it because all my rules met here. All right, and I sold it off. And when I sell this off, one thing you want to always do is, I always stress this for everybody, okay, is to always pay yourself first. You always want to pay yourself first, because you may regret not able to pay yourself, right? Or to close out on some trades if the market should ever go against you, okay? So, but fortunately for us is when we're trading, we know what price is doing by simply just by us watching what it's doing, right? I mean, essentially when price is performing or doing whatever behavior it's giving us, we are following our rules. The rules are essentially just to wait for prices to get liquidity, then to mitigate, then to show the aggression, show us the chalk boss sign, right? And then wait for prices to mitigate again, and then to sell it off from there. So everything met our rules. We were able to pay ourselves as soon as price pushed bearish here, right about 7% of the mark, 7% of this trade, and then we were having this low as our target only because this is where that low or the origin of the move pushed. Okay, so once we were in this trade, we were pretty much paying ourselves, and we're letting the rest of the trade run so we can collect more profits. Now, oops. Excuse me, here we go. All right, so now here's what's interesting. So now that I know that price is pushing bearish, I'm looking for more opportunities. You can see over here, I marked out some of the areas. Well, this liquidity sweep right here. There's a sweep. Okay, prices. This was the last high. This was a high that pushed below this low here, that broke this low. So my intention here was to find liquidity, to also find a potential sweep. Right, I didn't go in here just selling it immediately just because this was a high. Right, this high could not have been respected. It could have kept pushing bullish here. I would have already closed some partials and let the rest run. If it went up against me, then I would have had break even, which means now I'm a win-win on both sides. Right, I didn't lose anything. So this is as to why I'm not selling right away. Once price is sold off here, I quickly realized that we had a sweep of liquidity here, and I knew that we were still bearish. So what happened here was, if I zoom in, I'm going to show you something right over here. We had, oops, if I can put my crosshairs, if you look at my crosshairs right over here, I can't do it quite here, so I'm going to put my crosshairs to the right side. If you go over here, you'll see that I had a liquidity sweep from the highs here. Okay. This is nothing actually. This little line over here is nothing. But we had a liquidity sweep right here, if I can show you guys, from here to here, right there. Okay, so notice this wick coming up from here. Okay, what I was technically doing is waiting for price to show me aggression, which gave me the aggression, and I was able to enter this on the 1 second time frame. If I go on the 1 second, so I'm going to show you what I did here, because the 5 seconds isn't clear enough here. Let's go zoom in right here. Okay, here we go. Okay, so prices came here, respected the supply zone, as you can see, and pushed in showed me this aggression. And again, the aggression is really important because that tells us that banks were involved in there, right? Because we can't make this move, right? So when the aggression happens, prices have to go back up. Now, I was typically looking to sell it off from this supply, from this area here, but yeah, I don't know why it says it's there. It was right here's where I sold. But we knew that there was liquidity just right above it. So I waited for prices to come and take that liquidity and then to push bearish. Okay? And essentially mitigating this this supply zone right here, this other wick right over here. Okay, because this one here also had a sweep, as you can see right here. Let me just mark it out so you guys can see. Remember, there's a lot of sweeps of liquidity. If this works, there we go. Okay, right there's our sweep, right? You can see how this low here broke that high, and it swept the highs over there, and it came and mitigated this order block from this high over here, right? So that's why I knew this was my sell based on what I'm seeing in here. So once I sold it, again, I always follow my rules. I always pay myself out about 5 to 7% of the way, and then I let the rest run. And sure enough, everything performed out just beautifully. We were able to profit some really nicely here. This was, what was it, a 14.5%, and this was a, if this works, 18.5% right there. Okay, so I was pretty happy, right? I could be done. I was telling myself I could be done here if I want to, right? But you know, this was about 30-40 minutes in the beginning right here. So I normally trade for about an hour and a half, at 2 hours at most. Sometimes if I'm really feeling lucky, I'll trade, you know, I'll trade for three hours probably, just scalping. All right, so as I'm playing this, I'm going to show you guys what I'm doing here. So I know that this low is respected here, and I see that we have a break of structure here. We saw that there's liquidity here and more liquidity here. Let me just mark this out here. I didn't mark this out, but it was like this, okay? There's your liquidity. There's a buy happening here. There's more buying pressure happening here. So this just liquidated. And again, when I'm looking for when I'm looking for an opportunity, I'm always looking for prices to liquidate something first. Once the liquidation process happened, then we wait for the mitigation. The mitigation happens, and then we saw the aggression. Okay, the aggression is important. Okay, this move here from this low to this high is not a move that we could do, right? It's all the banks. So what I have to do is, once prices push aggressively here, prices have to fill in all this imbalance. Okay, banks are trying to give us the opportunity to come in now as retail traders, whatever, to come in and to take to partake in these in this trade. Okay, in this move. And so here is where you see right there. There's your order block, right? All this is liquidity. You can see I was really involved in here looking at the liquidity. I had to see liquidity. If I don't see it, then I can't be looking for potential entries here. Now, something happened. All right, I'm back, guys. Again, my computer's having issues with this Wi-Fi and storage space. Anyway, so as you can see, prices went bearish here, right? Swept all this liquidity, mitigated, and now pushed bullish. Now, again, my rule is once liquidity is taken, we need to see that bullish momentum happening here, this aggression. There's your chalk, right? The high was broken, the low and the high were broken, so this tells me that the direction is changing. So now I'm looking for prices to go bullish. And sure enough, I didn't enter right down here anywhere. I was waiting for more confirmation. I had to see everything clear. Confirmation is always good because, you know, at the end of the day, you're going to get in a high quality trade, risking very little, right? And you're looking to get that huge reward in the market. So what did I see here? I saw another buy here and another buy coming in here, right? My intention here is to know that this is the origin of this low, but then we have a low and a high and a low and a high. So I was looking to take advantage of this buy coming right in right here because we're following the flow of orders, okay? The order flow is really important. So prices are coming down here, tap the supply zone, or excuse me, this demand zone. Once I get this going here. All right, I don't know what's happening, but I'm back anyway. So once price came and tagged our demand zone, you can see that we clearly had liquidation taken. We had the aggression, but then price never stopped here. So I noticed we had what's called inducement right here at the very low. If I zoom in, you can see that this was not taken there; it was taken right there. You can see that the inducement was here. Prices came and took that inducement, and then we were able to push bullish here. So I was able to stay in this trade, enter this trade, and then start paying myself out as soon as price went up about 5 to 7%. Right? I'm looking to target this high now because prices can stop here and potentially reverse. Now, if we go on the 30 seconds, let's go on the 30 seconds so I can show you guys what is actually happening on the higher time frame. Now, as it's going up, I'm just relaxed right now. This is good for you guys because once you're in a trade like this, you can just pay yourself without having to really work too hard. A lot of this is really just managing a trade, right? As I zoomed out on the higher time frame, I could see that I had a liquidity right here and right here. You can see that we had a huge sell, another huge sell happening here. So this is a form of liquidity that I was looking to target, because we know that the markets also go towards liquidity. As you can see, we had a TP right over here, and we TP'd at 27.7%. So we had 27.7%, right? I let the rest of this trade run after we TP'd at this high here, and then of course, you know, like most trades or a lot of trades, sometimes the markets don't continue in a direction. They just do whatever they want to do, right? I got taken out here at break even. So at the end of the day, you can honestly see that how profitable our way of trading is, right? Our style of trading is very easy to understand because we stay within the rules that we believe, the way the market works, right? We do trade smart money concepts and price action. So guys, if you really like this video and this was very helpful to you guys, definitely leave a thumbs up to this video and definitely consider subscribing to this channel, because we always make free content, and we always leave free content on YouTube. Until then, guys, I will see you next.